kind of advice do you have to homeowners?
Practicing that preparedness. Starting the conversation now is always going to be a benefit to any association out there.
And welcome to Recovery Report Live. I'm Dan Odess, president of GlobalPro, where we manage risk to recovery, and we've managed more than $1 billion in recovery. We've also helped many businesses and community associations place insurance, more than 1,000 of them. And why that's important is because we understand what you need when you have a loss. And that's really the reason why you buy insurance. Now, the legislator in Florida may have forgotten that, but we have it here at GlobalPro. There's a lot of attention and a lot of eyes and a lot of conversation around these legislation bills, whether it's the Senate Bill 2D or 4D. If you haven't seen them yet and you're a business owner or a community association, check out our website. It's definitely inside our email blast. So if you're not subscribed to that, make sure you get it. You're going to want to take a look at these. These bills largely are centered around trying to fix this troubled insurance market in Florida, as well as stepping up and fixing the issues with community associations. A lot of the issues that were uncovered in the wake of the tragedy of Champlain South Tower. Unfortunately, through tragedy, a lot of times we try to fix things, we try to make things better, we try to make sure things like this don't happen again. Now, I think overwhelmingly in the community association industry, there is a positive feeling about the changes that have been made. Now, does it require a lot more of you as board members and managers, as well as unit owners, to step up and think about things a little bit differently? Yes. There's a lot more planning involved, a lot more audits, a lot more inspections. Is there costs associated with it? Yes, 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 right? So we need to do more planning. That's what it's all about here at GlobalPro Recovery. It's ready, recover, rebuild. We want to make sure that you are getting ready at all times, and so that if you do experience any sort of loss, that you can recover and start to rebuild. It's all a cyclical process. Budgets are cyclical. Placement of insurance is cyclical. Community board meetings and budget planning, everything else, all that thing goes into managing your community association is cyclical. Now, I'm very grateful to have an expert team of insurance adjusters, lawyers, engineers, contractors all around me to help our clients deal with these changes as they come. And it was a bit abrupt, right? We were expecting it, then there was a special session, and then the laws were passed, and next day we are required to start immediately planning to do things differently than you might have done the day before. Now, most of the community associations were anticipating some sort of change, so they were already working with us and other experts in the industry to anticipate what may come of this special session that we, again, anticipated happening. It happened, they passed the bill, now we got to deal with it. In the last episode, we talked a little bit about and broke down some of the issues as it relates to insurance. I didn't hit on much about the community association stuff because, quite frankly, there's a lot of legalese when it comes into it, and I really think that the experts, of the lawyers, really need to step up and provide this information. And we just had a great panel just 2 days ago where we had over 300 people log in live streaming for over an hour. By the time we actually went live with it and we started talking, we had more than 50 questions in the queue. By the end of it, there was over 100 questions still unanswered. And believe me, myself and the other panelists were really trying to keep up with those questions. But it just shows that there's a lot of uncertainty, there's a lot of questions, there's a lot of issues surrounding these bills and what it means, and does it implicate my association or my building? Does it in any way impact the things that we're doing and how we're planning? There's a lot to unpack. There's a lot to understand about it. Now, a lot of community associations aren't really focused on the reform and changes on the insurance side of it. And again, like I stated on the last episode, I spent a lot of time talking about that and kind of breaking down where I saw that the legislator failed us as consumers and policyholders. This legislation did absolutely nothing to help the insurance market in Florida. In fact, most policyholder advocates, whether they be lawyers, public adjusters, consultants that work on behalf of policyholders, will largely admit and tell you this will result in actually even more litigation, right? So this idea that the litigation, the legal costs and everything else were causing the rise or the issues in the insurance market, which led to the increased amount of rates and the insolvency of insurance companies, which is, quite frankly, until I've seen actual data, is total bullshit. And really, honestly, just a pedestal that and for whatever reason, you have an insurance agent who's really kind of pushing this as a legislator, who's pushing this agenda. Where's the disclosure on his financial interests in not only what he's being paid as from lobbyists or donations from lobbyist groups or special interest groups, but also what is his agency? Where are they making their money? Who is he placing insurance for? And has he received any sort of additional bonus or compensation for the placement of insurance and keeping the claims rate low in his firm? How is his firm? How is his agency performing, and how are they writing insurance and doing those different things? I question the motivation behind the legislators in passing such horrific bills that do absolutely nothing to help us in policyholders. I mean, literally absolutely nothing. They don't save you any money in insurance, and it's absolutely going to result in more litigation. Why? Not because the lawyers want to litigate, which is what you're led to believe. It's because they can't even explain the conflicting language between the two bills, 2D and 4D, and why insurance companies aren't required to report certain things, and there's this confusion over in Senate Bill 76 when they're supposed to report it, et cetera, et cetera. It's a really confusing piece of legislation, several pieces of legislation that admittedly, by those that actually wrote it and pushed for it, can't even explain. And did it do anything to help you with your contractors and this issue of AOB? No. They shifted the burden from your insurance companies in dealing with their underpayment and delayed payments to contractors for the work that they're actually completing onto you, the consumer, to deal with liens and litigation with those contractors. When your insurance company decides not to pay you for the work that they did, their only option is to actually sue you. And then you're dealing with a lawsuit and a lien against your building, which then gets reported, and it's going to implicate closings and delay in that process and everything else. So you're going to, again, it's really just punting the ball back to the consumer, dumping more on top of the consumer with this idea that they're championing for the policyholder. Oh, we want a better market with better rates. I've spoken with actuaries, underwriters. I've spoke directly with individuals in charge of the claims department with some of your biggest insurers selling to community associations, your surplus lines insurers, your non-admitted carriers. And I can tell you right now, they laughed at the legislation. They laughed at it. This is not going to change anything. In fact, they said that internally there's been memos going around, everything else from their legal counsel talking about all these things. They're laughing at the legislator in Florida. They did nothing to improve our situation here. So don't think anything changed. Continue to act as you are, but understand this though. There are additional endorsements and forms that again strip coverage. So even if rates were to stay the same, right? Let's say they don't increase, which they definitely are. Let's say they don't increase. If they take less coverage out of the policy, it means you're paying more for less. So you're paying more. Okay, let's just say what it is, right? Now, compound that issue with rising rates and less coverage. And they're allowing them to do this. In fact, I don't actually think community associations in Florida largely actually buy insurance that's compliant with the laws. So you have this disconnect between the obligation of an association to insure the building, the legislators' desire to soften things for the insurance companies, to make them less prone to litigation, to shift the burden again onto the associations, offer you no sort of relief on that other side of things, and with this promise that it's going to attract more insurers into the market. Well, I mean, come on. If you're going to give me more money for less and less coverage and I'm obligated to pay you less and less, I'm in, right? I'm a business that has shareholders. I'm making profit. I'm reporting billions. I mean, most of these parent companies for these insurance companies that sell insurance to community associations and business owners and commercial policy report billions in profits every single year, even during the pandemic. With this expectation that they may pay these claims for these pandemic-related losses, and largely the courts, for whatever reason, even though they got it wrong left and right, were not obligated to pay it. Okay, well, what happened to all that reserve money? What happened to all those profits, right? So the executives of this business, billions of, now it doesn't mean they shouldn't get paid for outperforming their numbers and doing great for the shareholders. I mean, that's their job, right? Let's be honest. But at the end of the day, that's not the promise of insurance, right? You're supposed to have fiduciary obligation, this idea of shifting, okay, for premium. and the risk to an insurer to pay for damages, things like that, like indemnification, the principle of indemnification, it's just not happening. And the legislator in Florida is not holding insurance companies accountable for that. In fact, they're allowing them to strip coverage and policies. They're allowing them to raise rates. In fact, if you actually, what we've noticed is that there's less and less independent adjusters in our markets throughout the United States, whether it's Texas, Florida, New York. We're seeing less independent adjusters. We've seen a consolidation, right? So to me, I'm seeing the same people on most of our claims in various different markets throughout the country. And we have a pretty good barometer for that. Like, we can really look at the data and we see it, right? I have some adjusters that are not only handling claims for our associations, businesses in Florida, but also Texas, out of their Atlanta office. Right? They're not even local. They're not even in those actual markets. They're neither in Florida nor Texas. What does this mean if we have a major storm? California actually has a law where if you change the adjuster more than 2 times, you're breaking the law. Where's that law, right? You actually even saw an InsurTech executive who has a multi-billion-dollar valuation, right, on his business, who's developing software for insurance companies to help streamline the claims process, come out in a recent article and say, insurance companies are not buying my software. In fact, they're lobbying for increased amount of time to adjust my claims, to adjust claims in general. And he's frustrated because he has all this money from all these VCs and interested investors, and he's developing better software for them, but they're actually asking for more time to adjust claims. And in California, they passed laws that you can't move claim files from multiple adjusters. You're not seeing that same type of legislation in Texas and Florida. I haven't seen anything like that in New York, New Jersey, tri-state area. Maybe it exists, but I haven't seen it. I haven't seen those types of efforts to that extreme to really acknowledge that there's an issue with the way in which insurance companies are handling claims. In fact, if you read the reports on consumer, and I've said this again in prior broadcasts, and I really feel like I'm beating a dead horse, but I just had a panel just yesterday, the whole room full of community association advisors, vendors, board members, managers, talking about these real issues. They are so confused over what to do, and yet again, in Florida, Citizens is stepping up to be the more attractive option. It's not supposed to be. And actually, if you had accurate reporting, I think insurance companies may be a little bit more honest about the money that they're making, and maybe there'd be a little bit of a change in things. They keep fighting the reporting issues. And even when they pass laws that requires an insurance company to report things, there's confusion as to when they're going to do and what the process is to doing it. So where are we going next? What's next? What are we anticipating? Where are we going with this? What is going to happen if we do have a major event? For those that just suffered flood damages here in Florida, we saw brokers step up and really campaign against actually making claims. They're saying that if you make a claim, you're going to expect your insurance rates to go from $25,000 to $100,000. This is actually in an email from a broker to an association that we represent. We're handling an open claim there on an unrelated issue to the flood, and the association contacted us. They're not happy with the broker to begin with. And then the broker sends this after they gave notice to the broker about the claim. The broker's reaction to it was, don't make the claim because your flood insurance rates are going to go from $25,000 to $100,000. Why? I mean, isn't that the whole reason why you buy insurance? Am I buying insurance? Am I paying money to an insurance company, right, for coverage? And then if I have a loss, they automatically raise my rates to $100,000. I mean, that doesn't happen with property insurance. I mean, contrary to popular beliefs. Now, an insurance company may not renew your insurance because you collected, let's say you paid $1 million in premium and you collect $10 million. But if we look at this as a financial tool and you measure that out over a period of time and you look at what you're recovering and what you're paying, we've done these numbers. We've done this for a number of associations as well as business owners. And it's about even. It's about where it should be, right? We understand there's some profit and there's a cost to selling insurance and operating their businesses. And maybe it's not a wash. That's fine. Maybe it continues to trend towards a loss for association businesses to buy insurance, but in no way should it be profitable. That's definitely not the right message. But it shouldn't be at such a great loss that if all I'm doing is, let's say I make a claim for, this claim was about $60,000, $50,000, $60,000, and my rates are gonna go from $25,000 to $100,000. Do the math with me real fast. What's the point if that insurance doesn't even comply with the obligations under, let's say, the Florida law for a community association anyways? What is the point, and why am I even buying insurance at that point? I bet you I can do better in the market, even in a downturn of the market where the stock market is crashing with oil. I bet you long term I could probably make better investments that pay me back at a better rate than the increased cost of the insurance, if that is true. But is it true? And I haven't seen that actually play out. I have never seen this happen. And we represent thousands of community associations, thousands, and billions of dollars of recovery. I've had associations recover $50+ million and not see rate increases. I've seen renewals on an insurer who paid over $10 million, flat renewal, 2-year renewal, extension, no increase. I've seen claims that come in $1 million and they get a 5%, 10% rate increase. Well, if I go to the market and we're at 20%, 30% in some other buildings who don't even file claims, then I'm looking at myself going, well, not such a bad deal. I think if we amortize this, or we look at this over time, and not a financial guy, so I'm not going to even try to use some fancy words that kind of over my head anyway else. I'm the nuts and bolts. I use my gut a lot. I have a lot of, planning KPIs. I have some of that fancy stuff built into the business plan here at GlobalPro, but I'm not going to try to get all financial on you. I'm just going to be really simple about this, right? So if I pay at a certain rate, and if I have modest increases over time, and I have claims, and I keep up with these things, and the insurance company's making some money, and I'm getting paid back at a modest rate for my losses and damages, and they're paying me timely. That's a component of it, because all this is just really based on time. So if it takes my insurance company 8 months or a year to pay me, they got to hold on to my money for 8 months to a year and make money on my money, right? I mean, that's the idea here. I mean, some of your biggest investors in real estate or businesses in the country, most people don't realize, are insurance companies. There are actually brokers out there that on behalf of insurance companies try to find deals to invest their money in to make money on money. Well, that money is premium dollars collected, right? So those are big insurance companies, and they're not all property related. Some are health and some are life and things like that. But the idea, though, is that they're taking those premium dollars, investing them, and they're making money on it. They're smart. They should do that. That's how they spread their risk. That's how they compensate for not only the cost of operating the company, but also making sure they have the money to be able to pay you. Only in Florida do a lot of these insurance companies go unchecked, that don't even have the reserves and don't make the proper investments, and then take on too much risk. They allow them to take on way more policies than they should, and with this promise that they're going to hit those numbers. And then when they complain and hem and haw about public adjusters and attorneys and the costs of those things, they talk about unreported issues, right? There's a reporting requirement, Senate Bill 76, that was not done or not complied with, based on the understanding from some legislators. Others differ on this opinion. I mean, let's just say there's two sides to it, but why is there two sides to it? There should not be two sides. So let's get this stuff straight. Let's get this right. For you community associations out there listening to this, things have changed. The market is ever changing. The policies you're getting are more expensive, less coverage. We need to lean on our brokers a little bit harder. They're there to help you through the process of acquiring insurance. Most do a great job. Unfortunately, there are bad actors out there that just want to wait until the last minute to get your renewal in. Don't allow them to do that. We're in storm season. If you've suffered any flood damages or failures in your roofs or windows, whatever else, be really careful about how you report those claims and damages. All right. If you need any assistance with that, our expert team is here, ready to assist you. And it doesn't mean that you need a contract to pay us. We want to bounce ideas off of us. Tell us about your process. Let us help you through those initial steps and explaining what's going on. It's not uncommon that you discover new and additional damages down the line, but understand when it comes to actually making a flood claim, you do have deadlines. You do have deadlines. There's about a 60-day requirement on a proof of loss. And it's a hard deadline The courts are very clear on this. So if you haven't already started working on actual proposals to complete this work, get it done quickly. And it's tough because we understand and we know, even the legislator know, even the insurance companies know, that it could be a year, 2 years when you discover additional damages. Well, unfortunately with the NFIP, there really isn't a honest supplemental process. It's so important to identify all of your damages within the first 60 days unless the government gives us an extension on it. I can't see that happening for this most recent storm. All right, I cannot see it happening. So it's really important. 60 days, it's almost like a tax filing deadline. Make sure you comply with it. Make sure you get those things in. That's my biggest advice for anyone that has suffered flood damages from this recent storm. Get your information in, get it submitted. Don't wait on the flood adjuster to ask you for it. Just go ahead and submit it, but check it, look at it. Make sure that the dates on the invoice comply or are in line with the date in which the actual loss occurred. Your contractors are maybe working real fast here to put all the stuff together for you. But also check the items that are included in there. Look closely at your elevator proposals, phase 1, phase 2, whatever it may be. Look at what they're actually doing. Make sure none of those items are maintenance related because they will get kicked back. They will get, and again, you got 60 days. It doesn't matter if it gets kicked back, denied, or whatever, 60 days, sit. Get that proof of loss in. Make sure you dot the I's, cross the T's. If you need any assistance with that, the insurance experts at GlobalPro are here to assist you. Go on our website, check out all our contact information there. But one of the biggest things that I implore everyone right now, we're in a time of a lot of uncertainty. There's a lot of changes occurring, particularly in the South Florida market, or let me say throughout the state of Florida in general. I'd say in the South Florida market, and I made that comment because I believe that a lot of the changes in insurance particularly mostly impact those in the South Florida market, right? However, the changes to the community association laws, as well as the laws in general regarding insurance are broadly applied throughout the state. So I just got back from a trip in Orlando where I was discussing this issue directly with a lot of community association managers, several interested board members as well. We were talking about what to anticipate, what to look for, whatever else. That's such a changing market, such a hot market. I drove up and down the I-4 corridor. There's so much construction going on in that area. Outside Tampa, St. Augustine, St. Petersburg, there's so much going on throughout the middle of the state. There's a lot of growth, a lot of changes going on. The construction methods are different. You still have a lot of stick built, as we say in the construction industry, wood structure, wood framed buildings. So there's a lot of changes, a lot of things to consider, the method of construction, the type of construction. And I bring that up because you have this issue regarding the roofs and right now and a conflict between the building code and the legislation that just recently passed. Again, this idea of how old the roof is, really important for new buildings down the road as you age and as you make repairs. How old is the roof? There's a little bit of confusion around that. Actually, I'll take that back. Way understatement. Huge amount of confusion. Even those that wrote the bill themselves and lobbied for it can't even explain it. How we're going to actually distinguish how old a roof is or distinguish between an old or a new roof or repair versus replacement. It's very, very confusing. But pay close attention to these things. And again, Florida tends to be that bellwether state where a lot of people a lot of other legislators see and watch what we do here in Florida and then apply it to our other markets in Texas. And Rob Bowlby, I know, is paying real close attention to this, tracking legislation in Texas in our Dallas office. And Matt had actually back up to New York area in the market. We have a lot of things going on there with the extreme weather that's been occurring. Same thing. Definitely anticipate in other markets, Midwest as well. I'm already seeing new policy forms in our greater Chicago market. I was just recently looking at some of that for some of the community associations up there that we've worked closely with. There are changes coming and the forms are changing. So pay close attention to it. Make sure that you're talking with your counsel about the implications and impacts of these new legislation and these bills in Florida. Budgets are a big concern. A lot of that goes into budgets, our deductibles. How do you anticipate some of these deductibles? These deductibles are all over the place. There's all these sublimits in insurance. All that stuff needs to be properly reserved. And without an insurance expert from GlobalPro with you and your accountant and your attorney and your engineers doing these studies, working together, there's no way that you're going to be able to be, no way that you're going to be ready for what's to come. So getting your broker involved in the budget season and everything else is nice to get some indication from the market, but you got to look at it a little bit different. You got to look beyond that. You got to look at mitigation efforts. Mitigation efforts are those preventative measures, protective safeguards, things you can do to make your building more attractive to insurance companies, and also to deal with claims as they occur. If you have preventative systems in place and you have a process around and everything else, things happen faster. You know where the documents are. You know when the loss occurred. You know how to more quickly respond to these things. Everything helps. Every little bit helps. I'm eternally grateful for all those that continue to tune in. Like us, subscribe to all of our channels, whether it's YouTube, LinkedIn, Facebook. We're going to continue promoting good information. We're going to continue providing to you the information you can use. We have so many panels and continue education classes coming up. If you don't know what GlobalPro is offering, get in touch with our staff. We want to reach out to you. We want to make sure that you have this information. We are talking about all things insurance as it relates to community association businesses. Education empowers those that are in a leadership position, whether you're a board member or a property manager. We want to make sure that you have all the information you can use. And while these broadcasts every Thursday at 11 o'clock Eastern Standard Time are fantastic, make sure you're tuned in and subscribed. Our one-on-one, our workshops, our panel discussions like we had last night and 2 days ago are an amazing opportunity to see us interact with other experts and talk about how we work and integrate into your process and theirs to help you better perform. So again, we'll see you same place, same time, right here in the Griffin Studio, 11 o'clock Eastern Standard Time next week, right here on the Recovery Report Live.